right, gang, welcome to the premium video, and we're going to kick this off with a quick review of the morning's trades and some of the nuances about the different windows that we look at as day traders in the morning. And one of the things that we know is happening is what I am maybe not so endearingly calling the pre-market pump. Low volume buying that occurs through the Asian session, European and UK, and only to find a lot of chop and sometimes weakness once the US session gets going. So you'll notice again, if you're going to see this market being carried higher, a lot of the heavy lifting is happening with low volume and before or after, not during, but before or after, sort of the US regular trading hours. So with that being said, we trade a 24-hour market, gang. We're not equity traders. We're not equity options traders only, although some of us do trade those markets. But we have a 24-hour market. We have access to the currency markets. We have access to the energy markets. We have access to metals and treasuries and the indices. And these aren't literally Forex like 24 hours, but they are very accessible. They're liquid enough, and they have some volatility that we can capitalize on. So partly I think when people come to futures, when they gravitate to futures, and it is a rarer breed of people who gravitates to futures. But I'm going to tell you something, and don't tell this to any stock and options traders, but I find futures traders are just better traders. Shh, that's our secret. And that's because they look at the market in a much more global way. They look at the market in a much more connected way, and they understand sector weightings in stocks. We do respect what happens in equities, but we are able to compartmentalize that. So there's a lot of movement that happens in futures, a lot, long before the Wall Street bell rings, and there's a lot of movement that happens after. So, keep those sessions in mind if that's something that you do want to engage in. That's kind of a general conversation about the window. The specifics about the window are this. Not that I get up at 2 a.m., but there's a window between the European Open to the Asian close. That's 2 to 4 a.m. Eastern. There's a window then that would also extend to the Wall Street Open, 2 a.m. to 9:30. There's a window that I think is more accessible to East Coast traders at 7 a.m. Eastern, and where generally you will notice the volatility and the volume start to pick up compared to the hours that preceded it. So 7 a.m. to about 9:30 is another interesting little window. And then 9:30 to 10 is another interesting window, and that's the clearing range. And each one of those windows can present their own highs and lows in price, their own highs and lows in the V-score, and their own ranges that we can trade. All right, so case in point today, the NASDAQ, with early in the session, we were mildly bullish. We look at our market barometer, which I've talked about before in these premium videos. We're talking about yen, bonds, crude oil, VIX, the COMDOLs, right? Not internals like tick, trend, put call ratios and stuff like that. But I'm talking about market barometer, right? The other markets that give us insight into flow in or out of the equities markets, in or out of treasuries, in and out of metals, etc. Which currencies are traders wanting to own or sell? That tells us a lot about risk appetite, which is buy stocks, and risk aversion, which is I don't want to buy stocks. So mildly bullish. And we had proximity, meaning that was the opportunity. We had proximity to the NASDAQ. And this is exactly what we walked through this morning during the open. It's even if you did not think the market was bullish today, the only thing you could have done at the bottom of the V-score and the bottom of the price range today was be a buyer or do nothing. If you thought the markets were slightly bearish, I would not recommend shorting the NQ. I would not recommend shorting the ES. I would tell you, rather go take a look at small cap or go take a look at big cap. Go take a look at the blue chip. Generally speaking, if I want to be long, I'm going to focus on tech. And if I want to focus on the short side, I'm much more comfortable, even as a day trader, being short the Russell or the Dow. Now, The NAS was the first one to give us an opportunity within the HPMR. It synced up really nice with the V-score. So you can see different times of day, and I was showing you a 2 a.m. pullback. You can see different times of day where the NAS pulled into the HPMR, but let's talk specifically the open, which is right here, okay? So a question that I get a lot of is, Rog, how do you trade before the bell? V-score, HPMR, gang. I use a lot of V-score. I use a lot of HPMR and the wave and grab. But in the we don't have the clearing ranges. We don't have necessarily the clarity from the VWAPs that we want because volume is low. But HPMRs and the V-score, especially when they sync up together. And there you go. The -2 V-score was a V-score extreme low that had plotted earlier in the morning, much earlier in the morning. We hit that level. We were in the HPMR support. Again, mildly bullish in the most bullish market of the four. That's just where we want to be. And it was the only setup to the long side that made sense. Now, fast forward to the Dow, which really didn't do anything for us during that hour of the day. Not a darn thing. But later on, it gave us our initial balance breach. 60-minute breakdown. All right? So we don't get short here, but this is our VWAP, initial balance to VWAP. And this is what sets up the latter half of the day. So the only trade that made sense, the only trade that we had validity for based on an initial balance was the short in the Dow. That was it. The short in the Dow. VWAP entry after the initial balance breach. And that is the only way that I look at the second half of the day. All right. Okay. So then, and by the way, a lot of folks ask, well, Rog, as the market breaks down, are you still looking at the market barometer? Are you still looking at those same markets? Yeah. I mean, if I'm seeing a breakdown, in a market, I'd like to see the yen strengthen. This is for weakness. I'd like to see the Aussie and the Canadian dollar and the New Zealand dollar, our COM dolls. I'd like to see them weaken. I'd like to see the VIX futures strengthen. I'd like to see crude weaken. I'd like to see bonds strengthen. Again, this is our market barometer. That's what I'll look at. Notice there's no gold there. I'd like to see copper. I think when people ask me about metals, gold in the markets, stop. Don't go there. There are plenty of times in history where I could show you in recent history where gold in the equity markets move higher, where gold in the equity markets move lower. They move inverse. Gold in the equity markets do not have a correlation that is as tight as you would think or that people like to think and talk about. They do not. Gold is a play on real yields. So notice I don't have gold here. Copper is actually going to reflect the equity market strength or weakness in a better way than gold. So if you were to actually kind of add an honorary member to the market barometer, let it be something like copper. But this is our market barometer. It's distinctly different from market internals, which I do not use. Nothing wrong with them, but they're better for momentum traders. So if you're a Momo trader, you want to keep an eye on internals. If you want to see a market breach a resistance level or support level, you want to see the tick confirm that. If you want a general gist of the market's ability to break higher through resistance or lower through support, understanding the put-call ratio is going to help that. The other reason I like the market barometer, which yes is a complete Roggyism, is it's not tied. It's to the Wall Street hours. It's 24-hour helpful. So as I go into the Asian session tonight, possibly looking for some trades, I can look at those markets. They're trading, right? Tick trend, good luck with that. Crickets. So they're 24-hour helpful for a 24-hour-ish kind of trader. So think about that. Think about, if I'm playing pre-market, same thing, gang. Same thing. So we like the market barometer, completely different set of measuring sticks. And it works well. Now, you'll notice the currencies have been a little more difficult. They've been a little bit more mixed. But even then, gang, it's still been pretty darn good. All right. So next is looking at things like, well, let's talk about copper. Let's move on over to copper and look at where we are. Finally getting some nice follow through. Yes? And, you know, I said that I'd love to see. Now, in yesterday's video, I talked about some levels. An optional target for copper. And by the way, if you're trading futures, do you have to wait till 9:30 to take a profit? Leave that for the stock suckers. I'm sometimes playing stocks. I got to wait for those hours, right? If you've got a target at 33.20 and we hit that in the quote unquote after hours, pay yourself. Pay yourself. Okay? Pay yourself. Ring the cash register. Yeah, I don't have a cash register button anymore. I got to get one, but I have this.
That was easy.
Okay? So remember, you're playing in a market that has liquidity darn near 24 hours a day. Optional targets 33.20. Target number 1, 28.20. And I talked about these in the premium video last night. All right, ZS, our soybeans trade. I know this one's been a tough one. But we got our 855 fill. So now what am I waiting for? 839.5, which is our yearly value area low, our 1 year, so 2020, or 831. Okay, those are our two targets for ZS, and we have our 855 fill. Moving on to gold. We have our long in gold. It's a little boring right now, but rather than talk about our targets in gold, although I do want to talk a little bit about our targets in gold, I also want to talk to you about when gold is going to get moving. So would I like gold to get to 1720? Yeah, I wouldn't mind that. And if you guys want to pay yourselves from 1688 entry to 1720, that's no problem. If you want a cha-ching, that's fine. We just call these cha-ching levels. If you want a cha-ching number 1, cool. Okay? I'd like to see cha-ching number 2 up around 1750. And then after that, if I'm looking at like a cha-ching number 3, that's going to be up here at 1790. That's really what I endearingly call the greedy bastard target. I mean, that's going to be like number 3. Don't make that number 1. Make that number 3. Okay? But when is gold going to get out of its own way? Remember, this has nothing to do with all that flight to safety nonsense. Not one bit. What this has to do with is, let me show you. And I show you this Quandl site quite a bit. In fact, this is in the notes for today. Let me make this a little bit bigger so y'all can see this. And so take a look at what we have here. And all you really need to notice is this. See that? That's why gold is stuck. When this gets moving, when the Treasury real yield curve rates get moving, which way do we want them to move? That way. When that starts heading lower, gold will start heading higher. And probably not till then. All right? So if you want your catalyst, keep an eye on those real yield. We want to see that moving lower. Now, you can put a couple, I would say, look at the, you can look at the 5. You can look at the 10. Okay? You can look at the different rates. No problem. You can choose those. But I've been looking at the 5. But I think you're getting the same type of insight out of the 10. 5 and 10 year. So if you're wondering which one's wrong, 5 and 10 year are good. 5 and 10 year are good. All right. That's gold. We have our ZB bond trade. It's moving higher. Where do I want this to go? The two targets that I've mentioned previously are 182. So that's going to be more like a 181.30. That can be our T1. Okay. And then that means we're stepping out in front of 182. And then I want you to step out in front of 183. So that could be like a 182.30. Those are the two levels that I'm looking at for bonds. And by the way, if you're in the TLT calls, When ZB hits those levels, then you can pay yourself and scale out of those TLT calls. And again, finally, for those of you that have been kind of suffering through the cattle trade as I have, not been fun, but we've been here already. I'm a little disappointed to see this shoot up like it has. Look, I think there's a lot going on sort of inside baseball on cattle. But if I were just to step back and look at this as a pure technician, this is what I would say, and this is still how I look at this market. The overall trend was down. Then the overall downtrend was broken. And I will still keep with me a bearish bias. So this is Charles Dow 101. I will stick with the psychology that preceded the, if you want to call it, which is fair to say, I will stick with the psychology that preceded the chop. So, not fun, but I still think we got a pretty good chance of this thing coming back down to earth, but time will tell. And this is the one that's really big. And again, I've talked about where I probably should have been when I nixed hogs off my watch list. I probably could have nixed cattle off it as well. So that's kind of my bad. But look, everything else that we've got for our focus on, soybean meal, we've talked about corn in previous videos, soybeans, which have been the gift that keeps on giving to us. I want to get short corn too, by the way, but we'll go from there. All right, gang, that's it for tonight's premium video, and I'll see you in the next update.